Welcome back, everybody, for my portfolio update for January 2025. And it's been a crazy start with one of my biggest holdings, Nvidia, down already over 10% year to date. So what does that mean for my performance against the index? Well, we're going to find out. And the market overall was up 2.7% in January, which is a great start to the new year. But where did I actually end up for the month? Well, let's take a look. Now, we're back into Snowball Analytics this month, which I must say has really helped since I transferred my accounts from Schwab over to Fidelity and Chase, which we're going to talk about a little bit more here in a minute. Now, as of February 2nd, my account is currently at $368,773 and some change. Now, if we take a look at the actual breakdown, I've adjusted this to see how we did for January only, which is basically year to date, so that's pretty easy. And we see that my account value is up over $20,000 for the month. But if we take a look at gains only, we see that the performance was up $17,233 and some change. So what you might notice is I had higher than normal contributions this month in terms of cash added. Normally, I had about $800 a month or so in there, but as I transferred accounts to Fidelity and Chase, I added a little bit more cash along the way, especially when TSM and Nvidia crashed because of DeepSeek. I put some more money in there because I wanted to take advantage of it. So overall, I added a little under $3,000 in terms of contributions for the month, but in terms of total gains, it was still over $17,000. And if we look at how that number breaks down, we see that most of it was capital gains of $16,988, with about $48 of dividends received and $381 and some change of realized P&L. And then about $185 in taxes and fees on the negative side. The taxes were for foreign tax paid on my Taiwan Semi dividends, which was automatically taken out by my broker. And then the fees were actually high this month because I added my account transfer fees in there, which ultimately got reimbursed by Chase and Fidelity, but those reimbursements came in as new cash. And ultimately it's a net wash, so it doesn't really matter, but it does show up in different places in Snowball, so that's why it's there. And as you can see for January, my portfolio was pretty up and down, starting strong, dipping hard, and then recovering, but having that crazy day when Nvidia and Taiwan Semi got wrecked. But let's see how I did against the S&P 500. Now, for the month, the S&P 500 was up 3%, accounting for the timing of my own buys and sells. And my portfolio was up 4.9%. So we outpaced the S&P 500 for the month by 1.9 percentage points, which is a great way to start the year. Now, let's actually look at the performance of my portfolio since I started it on December 8th, 2022. And if you remember, we ended 2024 just barely missing outpacing the S&P 500 since inception. But now we see my portfolio is up 54.38% compared to the S&P 500's 52.1%. So since inception, we are now outpacing the S&P 500 by a little over 2 percentage points, which is just pretty amazing when you consider where we were at just about 8 months ago. But since June of last year, we've outpaced the index in 7 of the last 8 months, which is a nice little trend that obviously helped us catch up. And look, like I always say, there's no guarantee that this outperformance is going to continue. I could have all my stocks crash and be trailing the index again next month. You just never know. But the other part of this that I want to say is you guys have gotten to see all the mistakes that I've made in this portfolio over the past 2 years or so. I didn't really follow my strategy in 2023, focusing way too heavy on recession-proof stocks. I sold companies like Walmart, Waste Management, Starbucks, and Lululemon that went up a lot afterwards. And then I bought companies like Apple, MSCI, and again, Lululemon that went down a bunch afterwards. And yet, even with all that, I still managed to catch up and hit my goal of outpacing the index, right? So it's just proof that you don't have to be perfect. We can continue to learn as we go and still reach our goals. So hopefully this trend of outperformance will continue and becomes a meaningful level of outperformance over time. We'll just have to wait and see. But overall, having a month where we earned over $17,000 in performance gains and outpaced the index by 1.9 percentage points is a really good month, and I'm definitely not complaining. Now, if we take a look at my investment income, specifically for the next 12 months, we see that my annual dividends and interest are at $2,033 and some change compared to the $1,991 that I had in November, which is a $41.85 increase from last month, about 2.1%. Now, in terms of my overall dividend yield for my portfolio, it's now at 0.55% or 55 basis points. But let's actually take a look at what dividends hit my account this month, and it's not going to take very long. On January 9th, I received $48.66 from Taiwan Semiconductor in 4 different accounts, and that was it, a total of $48.66 in dividend income for the month. Now, if we take a look at what I bought and sold for the month, on January 3rd, I sold 0.317 shares of Amazon at $223.87 a share. On January 6th, I sold 0.766 shares of Amazon at $227.12 a share. On January 7th, I sold 0.899 shares of Amazon at $227.73 a share, as well as 0.3104 shares of Meta at $631.66 a share. Now, if you remember last month, I told you that I had to sell my fractional shares in my accounts because I was transferring them to a different brokerage. So this is the case where all the rest of my fractional shares that I had left over from last month all got liquidated at the beginning of this month as those accounts got transferred. So I didn't really want to sell Amazon or Meta. This is just because I was moving accounts, but that's why they're there. On January 13th, I bought 6 shares of Taiwan Semi at $202.10 a share. And then on January 27th, I sold 21 shares of MSCI at $616.79 a share, and I bought 55 shares of Taiwan Semiconductor at $201.50 a share. Then lastly, also on the 27th, I bought 31 shares of NVIDIA at $127.28 a share. So obviously I tried to take advantage of the dip when all the DeepSeek stuff happened, but I did miss the best prices for both of those stocks, so that's a little unfortunate. I could have waited a little bit longer and got a lot better price, but that's okay. I think over time, the price is going to be fine for both of those stocks and it'll be a profitable add. Now, I've been adding Taiwan Semiconductor to my portfolio pretty much each month since October because I just think it looks attractive from a price to value standpoint. And NVIDIA was one of those where I hadn't added to it in a while because I really liked where my cost basis was at, but it was one of those things where I added it almost as much out of principle as anything else because all the DeepSeek stuff and NVIDIA and the impact on NVIDIA I think was totally overblown and in some cases just completely wrong. So I wanted to add to it just because I disagreed. Now, time will tell, obviously, but I think NVIDIA is going to do really well and still have a great year. So with that being said, let's take a look at my updated portfolio allocation and weightings. Now, Amazon is still at the top spot at just under 16%, NVIDIA over 14%, Meta over 12%, Visa at 11.4%, Apple just under 10%, Amex around 8.5%, TSM now exactly 8%, McDonald's at 7.8%, Cloudflare now at 7.6%, and Google at 4.15%. Now, if we take a look at what holdings performed the best over the last month, Cloudflare was up a whopping 28.5% in January, making it one of the best performers in the whole market. Meta was up almost 18%, Amazon up over 8%, Visa up over 8%, and Google up close to 8%. Amex was up almost 7%, and TSM up over 5%. So this was one of those cases where I had a handful of stocks that just really performed extremely well in January that helped offset a couple other performers that didn't do so well. Now, McDonald's was slightly down for the month, but then Apple was down over 5%, and NVIDIA down over 10% in January. Now, if we take a look at what holdings have performed the best overall, and remember, this is just price return since I take my dividends in cash to reinvest manually, Amex still in the top spot at over 108%. Cloudflare has rocketed up this list, now number 2 with over 70% in gains. Amazon over 45%, Google over 42%, Visa just under 40%, and Meta over 38%. Now, NVIDIA had been in the number 2 spot for close to a year, but they've dropped down to around a 35% gain. And now this is due to a couple things. Number one, NVIDIA just from a price standpoint has come down, so that's been part of it. But then also I recently added to it and increased my cost basis a little bit, which obviously reduces my total percentage gain. But still, overall, NVIDIA has been a great performer. Now, Apple is at 26.5%, McDonald's at just over 5%, and Taiwan Semi, which was negative last month, is now up just over 5% as well, which means that we have no more negative holdings. Oh, and if you're wondering what I made on my MSCI trade, I ended up being up 15.5% on that holding, even with my initial port entry, so not too bad, all things considered. So overall, this was obviously a really great month. I mean, anytime you have that much in performance gains, it's a great thing. And what I like about it is that my portfolios continue to outperform, even though NVIDIA has been struggling. And at the end of the day, NVIDIA drove a lot of that outperformance in 2024. But to see other companies right now like Cloudflare and Amazon and Meta really pick up that slack has been a really nice thing. Okay, just real quick, let me give you guys an update on my account transfers, which has been an interesting process to say the least, and I'll tell you what I mean. So I finally got everything moved over. My HSA and 401k are with Fidelity now, and my brokerage, traditional IRA, and Roth IRA are back at Chase. And moving stuff is definitely kind of a pain, but for the most part, most of the accounts just kind of moved over, and I just had to wait about a week, and it was no big deal. But that was definitely with two exceptions. One, the cash in my HSA that was held at Lively took about 3 weeks to move over to Fidelity. And that's because they literally cut a check, mail it, have it be received at Fidelity, and then have it be deposited, and then wait for it to clear, which is just crazy in 2025 that that's what we're doing. But, I get it. But ultimately, for that one, it was very little impact to me other than just waiting, so it was a little bit annoying, but no big deal. Now, for my self-employed 401k, it was a little different story. So it also took 3 weeks, but for different reasons, mainly because Schwab kept rejecting the transfer on their side. Now, part of this is my fault. I initially put the wrong information on the form when I submitted it, and it just took us all this time to kind of work through those issues and get it sent over. But we did finally get there, and I have to say that I've been really impressed with Fidelity overall. I love the app. I like the features on the brokerage account, like the automatic cash sweep, which was one of the reasons I switched. Being able to have a debit card and checks directly from a brokerage where it can be an emergency fund type of account that I have access to is really cool. And I've been experimenting with all the different features and different account types. I even opened up a Fidelity crypto account just to see what it's all about. Now, I have a long history with Bitcoin and understand how it all works and all that type of stuff, so I really just want to see how this account worked and maybe who it was best for. And obviously, this is not sponsored by Fidelity or anything like that. This is just my experience of moving over there, which so far at least has been really good. Now, I am going to do a more in-depth video about what I like and how Fidelity compares to Schwab, so definitely be on the lookout for that. And if any of you are actually interested in a deeper dive on the Fidelity crypto account, definitely let me know, and that's something that I may be able to do as well. So let's take a look ahead to next month and what holdings I think I'm going to add to going forward. Now, in terms of ones I'd like a higher allocation to, again, I'm okay with where things are at in terms of weight. I wanted more to Taiwan Semiconductor, and that's why I've been adding to it over the past few months, and I put most of the MSCI funds into TSM as well. But in general, I'm okay with where these are at for now. Now, in terms of ones I think are the best value right now, it's similar to the story from last month, but I would probably say Nvidia, Taiwan Semi, and Amazon. Now, Meta's been on this list for 5 straight months, and I'm going to be taking it off this month. Now, obviously, I think Meta is a great company, and I'm absolutely holding on to my position. But the stock's also gone up a bunch, and while they absolutely crushed earnings, they also guided for slower growth this next year as they've come up against comps from 2024. So I still think it's a great company. I just wouldn't consider it one of the best values in my portfolio anymore. But from the time that I started talking about Meta looking attractive back in September, it's up almost 35% to the S&P's 10%. So it'll be interesting to see what they do from here. Now, in terms of what I expect to be doing over the next month, again, looking for attractive entries to existing holdings, looking at new potential opportunities, as well as exploring the idea of selling covered calls on existing holdings that I want to keep, but could generate additional return from. So, for example, McDonald's is a great candidate for this because it's not really going to keep up with the Amazons or the Cloudflares of the world. It's not designed to do that, but it's a company that I love and I don't want to sell. So if I could sell some covered calls for some additional cash, it might be a nice way to generate additional returns for companies that I want to hold long term, but may not outperform the market. Because trying to consistently find and buy new companies isn't what I always want to do. I mean, I want to hold some of these companies, and even though they've gone up a bunch, their chance of outperforming, I think, goes down a bit. But it's also a little bit more complicated, so I'd have to explain it in a way that makes sense that you guys would actually want to watch. But if it's something that you're interested in, definitely let me know. I think it's an experiment that I might try out a little bit and just share my progress with you guys. All right, so like we do every month, let's review my now updated portfolio strategy. My purpose is to provide a high quality of life for my family in retirement so we never have to worry about money. My goal is to beat the S&P 500 in total return by 20% or better without impacting how much quality time I can spend with my family. And then lastly, my updated strategy is I want to attach myself to companies who have tangible market advantages that align with secular trends and are generating increasing cash flows with efficient capital allocation. Now, you guys have already seen my portfolio performance, but how well have I done at spending quality time with my family this month? Well, honestly, I think it probably could have been better. It's one of those things where we're coming out of the holidays, everyone's back to their old routines, and so we didn't quite do as much as maybe I would have liked to, but we did some stuff. In January, the weather dropped below freezing in San Antonio, so we spent a nice quiet night by the fireplace, which we hardly ever use. We celebrated a birthday at Grandma's house. We enjoyed some pickleball with good friends at Chicken and Pickle, which is always a really cool place to hang out. We all stayed home for a rare snow day in San Antonio, which is always crazy to see. And we watched our daughter play in the district tournament for basketball, which unfortunately their team lost, and they only lost by 2 points, and she fouled out. And so she was really disappointed, but we made it all feel better by stopping at McDonald's on the way home, so all was good. So overall, it was a pretty decent month in terms of family time. I would have liked to do more things, but again, this is something that I'm going to keep doing because at the end of the day, money is just a tool, and these type of experiences are what actually matter to me. Otherwise, the number on the screen really doesn't mean anything. All right, so if I recap what happened this month, my portfolio was up almost 5% and outpaced the S&P 500 by 1.9 percentage points. We're now outpacing the S&P 500 by over 2 percentage points since inception, and my move from Schwab to Fidelity and Chase is complete. And honestly, I just feel really lucky for the performance that we've had over these past 8 months or so, because again, we're at a point where people are saying the end of Nvidia is near, the market's so expensive it's going to crash, and look, all those things may happen. I mean, at the end of the day, we don't really know, but I'm simply going to keep executing my plan and monitoring my stocks to see if anything changes in the business story, or if I think there are better opportunities elsewhere. So how did you all end up for January? Let me know down in the comments below. Now, if you missed my video of how I updated my portfolio strategy for 2025, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.